Hey guys, welcome back. So yesterday, as in less than 24 hours ago, Coinbase did something that usually I'm a little bit weary about, and that is they raised capital. I gotta say though, this time it's recently IPO'd, but this time they used a convertible note or a convertible bond, which I gotta say, out of all the ways to raise capital, is probably one of the better ways to do it. However, I want to show you the implications of it. I want to show you the stock price a little bit, and then kind of the pros and cons I want to review here on a convertible note, pretty much using a live example. And the best way to do that is pretty much going over to the charts, removing the disclaimer, because that is our day trading live disclaimer. And then boom, one of the first articles here, let's just read it together. And let me actually zoom in here for everyone that maybe is using mobile or whatnot. Here is the news. So Coinbase Global said Monday it plans to sell $1.25 billion of convertible senior notes due 2026. That's a maturity date in a private offering to institutional buyers to bolster its balance sheet. We'll go over the balance sheet very quickly in their 10Q, but it looks pretty good. So I was actually kind of surprised that they were doing this offering here. Well, not really an offering, but convertible debt, because you would think they would be tight on cash or something like that. But I think what they're really trying to do is blow out the competition right now, really use the money to diversify and keep growing. That would be my guess. And I read some reports. That's what other people are kind of analyzing here as well. There's also an additional $187 million of notes are available to cover over allotments. The company said oftentimes when you do a convertible note, you have to give other investors that, let's say, have convertible notes or debt an equal opportunity to not get diluted pretty much. And that's pretty much what's going to happen to the retail investor and pretty much everyone that holds shares. You get a little bit diluted. Now, you're not going to be getting diluted until the notes are converted into stock, which here is around due 2026. So it's not really something we have to worry about just yet, but now it's there. And well, I think it's probably more or less priced in. Let's actually go ahead and look at the chart here a little bit as well. So Coinbase has been pretty much on a non-stop sell-off since the IPO, down about 45% from all-time highs and below the original listing price of $250. So this is a big deal. Yesterday was when the convertible note news came out. So we had let's see here, we opened here and then we fell down about 4 or 5%. After the news came, and then we've kind of bounced back up here a little bit, closing for more or less break even. More sell-off today, but bouncing back. So I think, based on the price action, it feels like, yeah, okay, you're as a shareholder, you're being diluted, but at the same time, man, Coinbase, after such a big sell-off, it feels like it hit a little bit of a low. So it might be a phenomenal swing trade if you are not looking to invest into it or something like that, because you think, yeah, we're below the listing price. The possible upside here back to 300 is a good 25% bounce. And then maybe if it gets back to 350, you got around 40% upside, which I think probably outweighs the potential short-term downside. I don't know that, everyone can make up their own mind here, but it's, that's kind of what my feeling is on it. Let me know your thoughts in the comments below. Always a good conversation. We do talk about it from time to time on the stream. Now, there is another kind of consensus here that's popping up that Brian Armstrong reported 1.8. Yeah, the revenue is really strong. Actually, let's talk about that really quickly. Hopefully I'm not flying all over the place right now, but I was going through the SEC filings here and the 10Q that came out on the 13th, so last week. You can really see here, I'm scrolling down here a little bit on their 10Q. They have $2 billion as of March 31st, 2021. So pretty much 2 months ago in cash or cash equivalents. So that is a lot of money. Now, that is not including these customer custodial funds, which is pretty much parked on their exchange. So this is a lot of money they're sitting on. And now they just raised pretty much another 1.25 to roughly $4 billion in additional capital. So the question really kind of remains, what are they going to be doing with all this capital? And if you want to check out here, so that was the 10K, and then on their 8K, which is kind of talking about anything company related, not really specific, so you never really know what's going to be on an 8K, but their recent publication here, current report, that was the 8K. Sorry, I just lost my train of thought, was the convertible debt that came out here. And you can see it. Here's they talking about a 1.25 billion aggregated principal amount of convertible senior notes due on 2026. So if you ever see any news here, you want to learn more about it, just go to the SEC filings and you could always dive way more into it. There's also, if you come here to, where is that? The Form 424B3, this is an amendment of the original prospectus, and they added that convertible note in the original prospectus as well. So it's kind of the same thing as the 8K kind of duplicate popping up there. Now, if you guys don't know what dilution is, it's something we talk about on this channel all the time because we're trading oftentimes small caps that are always doing secondary offerings, are always doing something shady, and their stock prices always look, I mean, miserable. Let me just show you guys a ticker, a classic ticker that we're day trading here, and this is classic dilution. See this stock, the volume here, you think, oh man, this was never even traded back here, but really what's going on is there's more and more and more shares coming out, so this stock price will never ever come back to these high levels. And and then you see stuff like this. This is what happens when a stock does too much dilution and then does reverse splits, and then they're trying to stay above the dollar or else they're going to get delisted. There's so much more we could dive into on this, but for now I just want to be focused on convertible bonds and what's kind of happening here to Coin. So let's go back to Coin. Now, a company like Coin isn't really your small cap. They're not really doing necessarily something shady. I mean, you guys can all debate that if you want. But this company, I don't think they're going to over dilute or anything like that. I mean, they're trying to create a reasonable stock price here. So let me go and pull up actually a little bit of the pros and cons, and then we'll go ahead and talk about one more thing that seems to be very, very bullish for Coinbase. So in terms of why a investor would, let's say, want to jump on convertible notes, and trust me, if we had access to it, I'd be jumping over it myself, is that you have that big upside potential, right? You are getting company debt more or less, but with the kind of goal not to get back your principal, but to get shares in the future. You also have priority in case liquidation. So in case, let's say, something does happen to Coinbase, you're going to get that money first before debt is paid out to shareholders. You also have priority over dividend payments, which is pretty big. You have a nice fixed interest rate. And then you have that par value returned at maturity, or ideally you're going to get shares, right? That's kind of the more or less reason why you're going with a convertible note. Otherwise, you're going to probably want a non-convertible note, which has a higher interest rate than your typical convertible note. And then another really nice thing is conversion has no tax obligation. So once you have your convertible notes, your debt, and that gets converted to stocks, you don't have to pay taxes on that. That is a seamless transaction, more or less. Now, why would a company want to do this? Well, an early stage company, which no longer is Coinbase, so before valuation, it delays that valuation, right? People can't really put a price target on you as easy because you're just getting debt. Basically, you're just getting capital. So that might be good for later seed rounds. Legal costs are much less, which I don't think Coinbase is really worrying about. Plus, they have an army of lawyers already. So this is more like, pre-seed kind of companies. Cheaper than other debt interest rates. That's kind of a little bit with we were talking about before with the non-convertible notes that aren't going to be turned into stocks. They usually have higher rates. When a bond is converted to stock, there's no interest payments. So that's pretty obvious. You no longer have any debt. It is now stocks. So that reduces debt after conversion. And then outstanding shares does not immediately increase outstanding shares. I don't know if I wrote that right. But anyway, you don't reduce earnings per share right away. You're not diluting investors right away. Obviously, the drawback is that maturity date, right? it's eventually there is going to be a, let's see, spelling errors here. There's eventually going to be a loan call, a loan extension, that conversion. So at one point there is going to be that kind of inevitable conversion or payback principle, which, you know, is obvious. But for the investor, really, it's kind of the you have a little bit more safety, because even if a company defaults, you're going to be one of those first people to get your money back, and then you're going to get shares in the future. So it's, I think for an investor, it's really, really nice way to go. And hopefully down the road, we'll be able to do some convertible notes ourselves. So here, you know, looking at Coin, I'm like, okay, well, this kind of makes sense. They're trying to get more capital. And then I was doing a little bit more reading. Let's see here. Consumers. There's a lot of news lately about people getting scammed by Elon Musk scammers. It's just popping up everywhere. Kathy Woods here, selling Apple, buys more Bitcoin. Coinbase. Here we go. And then if we scroll down on this article, here's a good little analysis. Dilution. Well, you know what I really wanted to be talking about here, I'm not sure if I can find the article. Yeah, here we go. Sorry about that. So Coinbase right now is looking for ways to diversify a little bit of the revenue, because right now they're still sitting about 90% of their income is coming from trading revenue, right? So people trading, paying those Coinbase fees and yada, yada. And the fees on trading crypto is becoming very, very competitive. So there's kind of that, you know, competition right now to who can get the lowest fees, kind of like traditional brokerages 2 years ago, pretty much going to $0 trading fees. That's kind of what's going on in the crypto space. So at one point, Coinbase's biggest kind of money maker is kind of going to go into the toilet a little bit. So they're trying to diversify. And one way here that is being talked about that Coinbase is looking to diversify is, let's say, Ethereum. Actually, let me zoom in again. So Ethereum is in the works of going to proof of stake instead of proof of work. And here we go, a little bit of a quote here. We believe Ethereum staking alone will generate over $100 million in net revenues by 2023 from $0 in Q1 2021. Obviously, $100 million as opposed to their $1.3 roughly billion in revenue isn't that big, but that's a huge increase, obviously, from zero. Noting that the Ethereum blockchain is moving to the proof of work protocol to a PoS soon. Proof of work blockchains like Bitcoin require tremendous amounts of energy and computing power generated to validate their digital ledger. All stuff you guys, I'm sure, are totally aware of. But the growth here on Coinbase is really, really substantial. And let me see if there's anything else I was missing. Not really, but you know, to really sum it up here, last week Coinbase, headed by Chief Executive Brian Armstrong, reported $1.8 billion in revenue, guys. That's huge, compared with $191 million in the first quarter a year ago. That is insane growth. So as long as they keep diversifying, maybe move into the DeFi space a little bit, or central finance, as you can kind of call it, and then they, you know, with staking and a lot of other things, there's a bunch of ways they can kind of diversify their offerings. And that's really what, you know, people are kind of concerned about. So it seems like this convertible note right now is kind of giving them that foundation to, you know, try to invest, diversify, and, you know, increase their product listings. That would be my take. So overall, yes, there's dilution we're seeing from Coinbase, but it does seem like overall it could be a bullish scenario for Coin. That's my analysis. I would love to hear yours in the comments below. Till then, guys, I'll see you first thing tomorrow morning. Like always, stay safe and make some awesome trades. Ciao, ciao.